Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, looking in on Amazon, Netflix, and Google on the daily and the weekly time frame. So the Amazon bears are in full control heading into next week. And more likely than not, on a breakout, when we consolidate, we form an equilibrium pattern, which is higher lows and lower highs in a tightening range. So we had our low of consolidation, our lower high, and the odds favored forming a higher low compared to 889.31. But obviously, it doesn't always play out as the odds indicate. So we had a bearish reaction in the market, a very weak end of the week, and we saw a very weak close here on Amazon. So we now have a lower high and a lower low on increased bear volume. These are all red flags that let us know further consolidation is coming, and the bears are not done here yet. So that low was 884.49, and we're looking down at the daily middle Bollinger Band to be the next support tested. That's going to be in the upper 870s to start next week, and if we were to lose that level, we'd have to start looking at previous resistances and now supports in the 876, 877 range. But as of right now, the bears are in full control on the daily time frame. The weekly time frame confirmed the bearish reversal inverted hammer from last week, and we're going to be pulling back now. We've been holding exponential weekly support all of 2017, and we're going to test these levels this coming week. So we'll be watching those levels, update them on Monday, see where they stand. But the close at the low of the day on increased bear volume certainly favors momentum to the downside, and it's candlesticks like these that I'm a lot more comfortable swinging. I'm more of a day trader personally. I like to be all cash at the end of the day, but when you have increasing bear volume and a close at the low, certainly makes you comfortable being a bear in Amazon on that setup. Netflix is also seeing weakness, and it's a red flag for the bulls losing the 50-day moving average support, which has held the past half dozen tests. We saw a close at the low of the day here as well, indicating momentum to the downside. 142.76, 141.98, 141.21 is key. If we break 141.21, we then have a lower high and a lower low, shifting the momentum a bit on this daily time frame. The weekly time frame still favoring the bulls, holding those exponential supports, but we got our bearish TCG cross on the verge here, and our bearish MACD cross already occurred. So we've been holding these exponential supports on Netflix for the past, at this point, it's been about 5 months, and we are on the verge of losing them. So Netflix bulls really want to hold 141.21 to remain in control on the daily time frame. We are approaching earnings here coming up in the coming month, so we do need to be watching for positioning of traders and investors heading into those earnings. But right now, the market weakness is certainly heading to the downside on Netflix. Google rejecting from exponential resistance on the daily time frame, upper wicks the past 4 days. The bulls have been holding up. We have a low of 837.59 and 837.85, maintaining support. But if we were to pull back and lose 834.60, we would be watching down at support of 824.30. So we have a key pattern here as well, equilibrium. We had the breakout at the all-time high, the dump on news to the low, lower high, now a higher low at 834.60. That's why that level is important. And the bulls want to see a bounce back up to the 850s to continue tightening into this pattern. But again, the weakness in the market is not helping the bulls. I have noticed that the bulls in Google the past 2 days, Thursday and Friday, have done a better job of holding up than the overall tech sector and the market as a whole. So that's worth keeping an eye on, but still not really proving anything for the bulls if we cannot get over these exponential resistances. The weekly time frame middle Bollinger Band test appears to be coming. That's going to be in the low 830s to start next week. We did hold that at the low of the last dump, so we're watching to see if that level can continue to hold. On the verge of a bearish TCG cross here as well after the bearish MACD cross already occurred, so that's a key middle Bollinger Band. And if we were to lose that low of 824.30, that would shift momentum on the weekly time frame longer term. So that's the longer term level to be watching, 824.30, and the shorter term level to be watching is 834.60. So keeping an eye on weakness in these high beta names as the market is continuing to see weakness and pullback. watching the tech sector confirming bearish reversal candlesticks for the first time on the weekly time frame since the election. So certainly shifting momentum in terms of consolidation, which favors the bears, and we'll be keeping an eye to see if these weekly charts break their higher low pattern, which a lot of them have a lot of wiggle room before that were to happen. So not at risk at this point, but just keeping an eye on the downside momentum and the volume associated with it. Thanks for tuning in. We'll see you soon.